Hello and welcome. I'm Natalie MacDonald and you're joining us here at the JW Marriott Hotel in Hong Kong for what is day 3 of SuperReturn Asia 2016. Over the next 15 minutes, we're going to be guiding you through some of the topics, trends, scandal and gossip perhaps even that emerged from today. And thankfully, you don't have to listen to just me over the next 15 minutes. I do have a fantastic panel with me today also supporting. So with no further ado, let me give that opportunity to introduce them, and then we'll get stuck into today's agenda. Now, to my right, I have Gabriel Lee, who is Managing Director of Orchid Asia Group Management. Gabriel, thank you so much for taking the time to sit down with us today. Much appreciated.
Well, thank you for inviting us.
No problem at all. Now, I also have Jenny Zheng from MSA. Jenny, a pleasure to have another female on the desk today. That's something that we haven't achieved so far this week, so thank you very much for joining us.
Thank you.
No problem at all. Now, certainly last but by no means least, I'll also take this opportunity to introduce Venkat Ramaswamy, who's from Edelweiss Alternatives. Venkat, thank you so much for taking the opportunity to chat with us today.
Thank you, Natalie.
Okay, so I'll take this opportunity to raise a toast to day 3 of SuperReturn Asia 2016. And thank you all similarly for joining us. Now, with some of the pleasantries out of the way, let's really jump straight in. And something that has been heavily discussed, not only today, but also throughout this entire conference, has really been China. Whether it has been the economic rebalancing of the economy, whether it has been, that economic volatility, market volatility, really, China has been the common threads through each and every one of the discussions. Now, Gabriel, I know that you particularly were part of a discussion on China today. Where are you seeing opportunities for markets and let's be honest, making money moving forwards in China?
Well, as everyone knows, China has gone through a very difficult adjustment over the last couple of years with the devaluation of the renminbi and also the economic slowdown, especially in the manufacturing sector. However, I believe that we have reached a bottom and we're stabilizing at a lower number, and I believe that over the next couple of years we'll see opportunities for China to recover in terms of its growth in the next 6 to 18 months.
Now, also similarly, I mean, one of the items that was discussed today kind of alongside China and again throughout the conference has been valuations. Just sticking with that China topic, Jenny, I noticed in your panel session earlier today, you were speaking regarding niche sectors in China, such as e-commerce was, I think, the example that you gave, and how that has become perhaps somewhat overvalued. Where are you seeing that opportunity in China then?
Very good question. Actually, in China, everybody knows the GDP is going down, but everybody will assume get more stable, and also like Gabriel and our firm, we are focused on TMT and healthcare. These two sectors actually is anti-cyclical. So, for example, a lot of manufacturing and steel and foreign trade, those kind of businesses going down. But the whole concept for internet and mobile internet to use the high-tech products and applications to make the traditional business more efficient. That's that's the reason we think in China still have a huge chance to build like the younger generation of entrepreneurs. They build the really high entry barrier kind of high-tech startup company. Can pass some of the niche sector can pass even the business model of Silicon Valley, like AI, big data, fintech, and the life science related niche sectors. We fully believe have a lot of people can make this.
One of the interesting items, so I did a fireside chat this morning with Jing Ulrich of JP Morgan Chase, and one of the interesting items that she mentioned actually in terms of future opportunity and develop in China and Chinese markets is actually that growing middle class that you have there and the opportunities that creates within China's efforts to rebalance and become slightly more services oriented. Now, Venkat, I'll come to you. You spoke in quite an interesting panel today. You were speaking on, the title was Credit and Distressed Markets. Now, I would put the question to you, which of those baskets does China fall into for you?
So currently, if you look at global investors, they think on the credit side, China falls in the distressed bucket because there is a perception that there is a high level of, and nobody has quantified it, there is a reasonable level of NPL sitting inside Chinese banks. And there is, however, a sense that the Chinese government will be able to manage proper financial restructuring of these assets, but it is still in front of us. And that is something that I think global investors will find many opportunities as that area opens up.
So how are managers able to currently and also in the future able to take advantage of those opportunities then, particularly in private credit, do you feel? Gabriel, where are you seeing that?
Well, I think on the credit side, I think in China, the biggest opportunity actually is to buy loans which actually have been fully discounted compared to the risk and the values that reflect the underlying assets behind the loans. And there are many opportunities in the area because a lot of the loans were made backing mortgages and housing, and many of that, the housing prices have actually gone up, over the last year, and it's gone up a lot, 30–40% in some of the major cities. And the loans were made, several years ago, and so, a lot of the loans are actually okay, and maybe some of the banks have some of the bad loans, but if you can find opportunities to buy these types of loans at discounts, there might be opportunities to make a return.
But also, if we're looking at these opportunities, in private credit in the broader region, also, Venkat, I understand that you're India-based. How do you see these opportunities across the broader region?
So, at least in India, increasingly private credit is starting to be an alternative to private equity itself, because Indian entrepreneurs love their own equity, and most Indian companies have, even public companies, the families which started the business or the entrepreneur who started the business typically has between 30 and 60% of the company even after they are public. And so private credit has become a source of growth capital for these entrepreneurs so that they can borrow in the initial stages and dilute less when the company is a little more mature. And that allows us to participate in growth of the economy and have credit kind of downside protection. We call it the risk-adjusted returns philosophy of investing.
Jenny, you're nodding. Do you agree?
Actually, I want to change those questions. How to take advantage in private equity and venture capital?
Sure.
Okay. Actually, when I have a kind of a friend discussion with our industry friends and people, we always say in our industry, and the people and the market give a chance to make money. We call this year and the next year maybe the winter timing of China venture capital investment. That's but on the other side, we view this the very good timing, very good vintage year to do investment, especially in those kind of two sectors. It's kind of anti-circle, I said before. We also say have a special window called stupid window. It's not real stupid, kind of fake stupid window. That means everybody is scared, everybody hold back, everybody slow down for the investment. But only the few of the managers they can take advantage of the market. Before, China growth always take advantage of the population of dividend, the market dividend. Now we will say we take advantage of the winter window, and they take advantage of the stupid window. Yeah, that's we will just opposite this anti the circle to do. Actually, this year we already finished more investment than last year.
I think one of possibly my favorite analogies throughout this conference was this conversation of, China is approaching that slower growth, that winter period, and the panel participant turned around and said, but what happens? What do you have before winter? You have autumn. What is autumn? Harvest season, and that got quite the laughter from the panel. But I mean, again, alongside China, we already touched on valuations slightly earlier, and really, the current volatility and the impact that it has on valuations. And again, Gabriel, I'll come to you. Are you finding that very noticeable, that impact of volatility on valuations?
Definitely. I mean, the valuations of the private markets have fallen by about 30-40% over the last 12-18 months. And I think that it will not come back up in the next 6 to 12 months because the public markets have actually fallen and have stayed down. And so the private markets tend to follow the public markets, but with a 9 to 12 month lag. So we're, the peak of the market was really May kind of 2015. Now it's September, 2016, so we've been in it for about, 16 months. And I think that this downturn, if you look at what happened to the United States, 2000, 2003, it took really 3 years, to kind of work through all the excesses. And we're in kind of month 16, so, we got a little bit of time to go, I think. Valuations will probably stay down for a little while, and there's an opportunity to go ahead and take advantage of the lower valuations to make investments currently.
I believe that the question that was posed during your panel, Jenny, was, had valuations become too rich, perhaps, and that's where we're seeing sort of a lower floor now, somewhat.
I think valuation in our industry actually is not a technical question. It's a philosophical question, or maybe it's art. First of all, in China, the past 5 years, especially in tech-related investment, people always say overheated, have a bubble. That means the valuation very high. Like I said, for example, before IPO, the case study of Alibaba, its valuation already more than $13 billion US. But if you are a manager that still make investment to this firm, then make huge return and a very decent return for LP. So that means the valuation compared to who? So what's your benchmark? What's your comparable company? Alibaba compared to Amazon at that time, quite cheap, valuation. Of course, now Alibaba's valuation already passed Amazon. And also for valuation, for our firm philosophy, we never bet the price and the valuation to chase this overheated deals and founders in China. But we fully back the leading entrepreneur, like we say in China, have a lot of young people, have a lot of very successful serial entrepreneurs that need 1 firm or 2 firm went to IPO in Nasdaq and Asia, but they still have a lot of energy to create the next big things. We fully believe those kind of founders and entrepreneurs and appreciate and admire the entrepreneurship. Then we fully back them, give them premium of valuation.
Gabriel, Venkati, my apologies. I'll give you the opportunity for the last word on this. What effect are you noting current volatility is having on valuations?
So India currently is in the strange place where it is currently the largest or fastest growing large economy currently in the world. And in private equity, India traditionally has had overvaluation, and that has been predominantly because of the amount of capital chasing deals of that nature. We do not currently still face a huge problem of that kind in the private credit side because the amount of competition is extremely, extremely limited. I think luckily even on the private equity side, valuations have not raced away in a huge manner like it did in the 2005, 6, 7 time frame. And even though the stock markets, and I agree with Gabriel, private markets follow the public markets in a 9 to 12 month lag. Public markets have done well, and I don't think, however, that the private markets have raced ahead, but they haven't gone down by any stretch of imagination. And we still have way too much dry powder in the private equity domain, according to my opinion.
Well, Gabriel, Venkat, even on that note, I will draw this to an end. Venkat, Jenny, Gabriel, thank you so much for taking the time to chat with us. Really appreciate you coming together and sharing ideas and giving us your insight. Thank you so much.
Thank
Thank you,
you.
Natalie.
Thank
That
you.
is
Thank you,
all we've got time for right now. Again, our many thanks to you also at home for tuning in and watching. You can continue to follow some of the topics and trends emerging from SuperReturn Asia 2016 by using the hashtag SRAsia. I'm Natalie MacDonald. Thank you so much for watching. Goodbye.